What is up, everybody? Let me make sure I'm going out. What is up, everybody? Welcome back to the show. My name is Ansel Lindner. This is Bitcoin and Markets. Happy Friday. Made it another week. Freeform Friday. I don't have too much planned other than going through a few tweets. I'll be watching the chat here and watching the Telegram guys and see if they raise their hand and want to make any comments live on the stream. But if you're new here, guys, this is the oldest Bitcoin and macro show. Been going since 2016, off and on, but most of that time I have been going strong with content. You guys can find all of my stuff at bitcoinandmarkets.com. I'll go ahead and share that screen. Bitcoinandmarkets.com. I put out all of my stuff today. Yesterday, I put out this crypto is an affinity fraud on Bitcoin, and that went out to paying members over on bitcoinandmarkets.com. And then in a couple days, maybe on Monday with the newsletter, that will become free for everybody. Also put out FedWatch this morning. So we did that. We do those Thursdays with Bitcoin Magazine, where we are very central bank focused during all of that, or during those shows. And then I put out a blog post the next day with all the charts that we use. So if you do go back and listen to the podcast version, you can. My chair keeps popping, guys. I'm a Bitcoiner. I'm not buying a new chair. Anyways, that you can find all the charts and stuff that we talk about if you listen to the podcast version of FedWatch by going to the website. But yeah, check out bitcoinandmarkets.com. Sign up for the free weekly newsletter. Covers everything in Bitcoin, all the different sectors in the Bitcoin industry, all the different topics, like, the headlines of the week. And also there you can support the show. For $5 a month, you become a member. You can join the premium tier, and you can get my premium price newsletter that comes out once a week as well, usually on Friday. I'm going to try to get it done by today, but since I've been off for a week due to vacation, that I might there's a lot to cover, so I might not be able to get that done today. It might go out over the weekend. But okay, that is bitcoinandmarkets.com. I appreciate everyone that does support. So Fridays, let's see, what do I have lined up? I wanted to go through this Stephen Lubka. I hope I'm saying his name right, Lubka. Some tweets that he's had recently on price models that I have responded to. And he works for Swan, really good guy. I've met him in person once, and we had, a long discussion. We probably talked, he and another guy from Swan, for at least an hour, if not 2 hours, on different monetary topics and stuff. He's a very sharp guy, but here I just think he's off base. So I wanted to go through a couple of his tweets and a couple of my responses and see if we can learn anything. Also, then I'm going to get into the Telegram, go through some of the posts that I made in Telegram this morning, and just talk about that stuff. So kind of a free form Friday day. Like I said, I'm going to be watching the comment section. Let's see. I have brought that up. If there's any questions and you're watching on YouTube or Rumble, you can put it in the comment section, and I should be able to see that. It should come through on my streaming software. So, okay. I guess also Telegram guys, if you don't want to actually come on the mic, you can comment in the post that announced the live stream, and I will look in there and read those out. Okay, let's get back to this tweet. Stephen Lubka. He's been, kind of made a name for himself talking about being in the sunshine and doing cold deadlifts and getting more that, just walking outside for health. And I 100% agree with that. I mean, we are totally aligned on that sort of thing. Totally aligned, I think, ideologically in Bitcoin and health, it seems like, even though he seems to be more healthy than I am. And he's also a very tall guy. I think he's like 6'4" or something. But anyways, okay, let's get into this tweet right here. Stock to flow has kind of come back in to the discussion of stock to flow has come back into fashion. Let me give a little background for anybody that's new, that's finding this. Stock to flow means the rate that new issuance comes on relative to the stockpile of old issuance. So if you think about it in gold terms, there's a stockpile of gold above ground in the world, and new gold is mined every year. Now, what is that flow of new gold versus the stock of old gold? That's a stock to flow. And gold has roughly a 1 to 2% flow. That means it actually inflates at 1 to 2% a year. There is inflation built into the gold standard. And Bitcoin is unique because it has the ultimate stock to flow is infinite, right? There's going to be no flow at some point in the future, 30 years or so. No, 110 years, something like that from today, there will be no more flow. And so the stock to flow will be infinite. And there was a guy, Plan B, on Twitter that came out several years ago, and he took some ideas of hard money from Saifedean and the Austrian school, and I guess the monetization process from the Austrian school, where money is selected by the market. And so then he mixed that with Saifedean's stock to flow idea, and he came up with a price model. And it was very, very popular. And actually, I'm going to open up that website first. Let's see. Dang, what is it? What's his website? It's something like Worldwide Bitcoin or something. I can't find it exactly, but let me just go to this first one that came up. Sorry, guys, on the fly here. All right. This looks very similar to Plan B's. I mean, it's probably using his formula, and he has updated his formula, and that's one of the, criticisms of this model. But you can see that using some sort of algorithm or regression or something, this dark line is what the stock to flow model says is the fair market value. And he's modeled this off of many different assets, like gold and silver have different stock to flows, and they have a certain market cap or price, I guess. And platinum will have a similar thing. And you can even do this with oil or with almost any commodity. Seems to fit in a general ballpark of their stock to flow. And that's a very important piece of any valuation model, in my opinion. But here you can see he was expecting another blow off top. And that's why he was talking about 100K Bitcoin was right around the corner, and it never came. And so he got dissed on by the community, and he's kind of disappeared from, being a public influencer. I think he still tweets and stuff, but he hasn't been on a lot of podcasts that I've seen. And this has kind of fallen out of favor. But really, I mean, it's still generally within the ballpark. I mean, what if this price, goes up by the end of 2024? We're all the way up here at 500K. We're right back in line with this price stock to flow model. He never claimed that it was going to describe the price exactly. Well, maybe he did call the 100K by a certain date, and that's why he was wrong on that and fell out of favor. But this model doesn't look like it hugs exactly to this line ever. It just goes up and down, in and out, and now we're kind of in a similar situation. So I still like the stock to flow model. I think it's extremely informative. But anyway, that has recently come back into discussion in the Bitcoin space. And so Stephen Lupka here, he tweeted this: all price models are stupid. And no, this isn't all models are wrong, some are useful. This is all price models are stupid. They are stupid because they implicitly assume the drivers of price are the inputs of the model. Let me expand this. But that can never be true because the drivers of price are all human minds acting independently now and forever. This is completely wrong. This is completely wrong. But I'll get into my my response here in a second. You can't model price into the future. I mean, obviously you can. This is like contradicted every single day, all day long. All right. All price models are both wrong and stupid. I mean, price models, if they predict a specific price and it must be that price, and it can describe all prices along the way to get to that price, yes, they will be wrong. But not all price models say that. The stock to flow doesn't say that. Stock to flow says price will tend this way. I mean, if you buy Bitcoin, you inherently believe in a price model. If you buy and hold any investment, you inherently believe in a price model. Else you wouldn't act. You could not act on some belief that you didn't have, you know. I'm not against just one bad model. I'm against them all. Okay. And let's be clear, this doesn't mean that capital allocators can't guess price directionally or even specifically over certain time horizons. Well, yes, it does. That's a model. Even if it's guessing, it's a model. You know, throwing a dart at a board, that's a model. I'll get into my reaction here. Price directionally, they can certainly use a combination of faculties to attempt to do so. And they do so very accurately all the time. And I will get into that. But it means they can't model price with inputs. Because the moment you start saying shit like, oh, X variable drives price into the future, you are already on the bus to stupid town. Okay. So, where was my initial response? All right, right here. Value versus price. This, I think, is where he gets it initially wrong. Of course, value is subjective, but price is not, I say. These aren't value models, they are price models. So when he goes in here and he says that well, now I don't want to expand this again because it'll change my view, but he says that all prices are set by subjective value. That's wrong. Okay. For example, if I have a subjective value right now, well, first off, I mean, lots of things go into subjective value: time, place, circumstance, beliefs. Your beliefs can change, which will change your subjective value. Your state can change. I get hungry or I'm not hungry. I'm sleepy or I'm not sleepy. I'm cold or I'm hot. So your circumstance will dictate your subjective value at that time. Okay. Yeah. So things can change. Your subjective value is not like set in stone. It changes from moment to moment. But let's say I value $1 less than I value an apple. So I'm willing to exchange my $1 for an apple. But that doesn't tell me what my subjective value is. That just says relative to the dollar, I value the apple more. Has nothing to do with price. I hope that makes sense. Subjective value is not a price model. It has nothing to do with price. It has to do with relative valuation. I value this thing more than that thing. And since prices are denominated in, say, dollars or Bitcoin or whatever, you could say that my subjective value has to do with the price I'm willing to pay, but that's not a number because I might have paid $1.50. That's where my subjective value would set things. Okay. You can't tell what kind of profit of valuation that you have. Prices are not subjective, they are objective. I can walk into the store and see that apple, those grapes or whatever, cost $1.50 a pound. That's an objective price. The price of a vehicle, yeah, you can negotiate it, but that's an objective price. Prices are objective. They are not just in your mind. Okay, so that's the main problem, is value versus price. It seems as though you think there is zero way to predict supply and demand with a high degree of certainty. Tell that to leagues of industries that can predict their supply and demand. Kind of silly to even say that. I mean, business is predicated on being able to accurately predict supply and demand for your products. Why do I know that I can afford to pay X for some input if I can't model the demand and the price that demand is willing to pay? Of course, all business is predicated on correctly predicting supply and demand. If we could not predict supply and demand and we could not predict price to a high degree of certainty, there would be no business. There would be none. Human minds are absolutely not independent, and this is by his independent subjective value. Our needs and desires are highly circumscribed and predictable. We all need to drink, eat, sleep, stay warm or cool, and be around people. In reality, all human minds are very similar, with similar bodies, with similar needs, dictating our subjective values and making demand predictable. Sure, you can like a different food or a different brand of tool, but in aggregate, humans need a certain amount of things to survive. Now, I can go with Stephen as far as like a very marginal product, like a new product whose supply and demand is not well established. And I get into that in another reply. Let's go to this one. So he kept going on another tweet, and he said, well, in a response to that initial tweet, he's like, I didn't know that people didn't know about Rothbard and subjective value. No, but people do know about that, but you're misinterpreting what subjective value means and what it is good for. It doesn't mean prices. So anyway, this is a separate tweet. Without value being subjective, trade would be zero sum. No, there would be no trade. You can't have trade if it's zero sum. It would be completely impossible for both parties to come out ahead if there were universal hierarchies of value. I don't get to this in my response, but no, of course, you can have diminishing marginal value, right? So somebody has 1,000 of something and somebody has 1 or 0 and they want a second or third one, they're going to buy it from a person that has 1,000 that values it less. So even with some relative universal hierarchy, because we all need to eat, drink, sleep, procreate, those types of things, that there are general universal hierarchies of value. Absolutely. And those things are relative to each other and relative to each other. But anyway, that's getting a little woo-woo. To an aspiring Mongol warlord, 10 horses may be worth more than 1 Tesla. To you, maybe not so much. Okay, this has nothing to do with price. Price is objective. Value is subjective. You diss on price models using value-based arguments. Again, this is about prices, not about value. Supply and demand are highly predictable in aggregate, but not the value any one person gets from eating an apple. They are different. He says price is set by the intersection of subjective value, and that's wrong. Price is a market clearing price. What determines the price you are willing to pay for something? Nothing. There is no price you are willing to pay. There is no price you're willing to pay. So I say, and I just responded to this because I don't a lot of time check the responses to my tweets, but I just tweeted this out before the live stream here. Price is objective and set in the market through supply and demand. Mises would agree that you don't even know what your subjective value is. It is ordinal, not discrete. You can't say, I value an apple at $1.27. I will not pay $1.28. To answer your question, we don't know what price we are willing to pay for something. It is dependent on time, place, circumstances, and can only give you a relative value. So, what determines the price people do pay? Not the one they're willing to pay. That's supply and demand, the market clearing price. This is predicted every second of every day by businesses when they decide what to produce, how much, and for what price. If we couldn't predict supply and demand quite well into the future, there would be no business. You can try it. What will the price of an orange be in 12 months? Just as a thought experiment, what do you think the price of an orange will be in 12 months? If I say the price of an orange today is 88 cents, what do you think the price of an orange will be in 12 months? If you guess the same as today plus maybe 1 or 2%, you'll probably be pretty close. It's highly predictable. And yes, you could be off by a month or two or 1% or even 5% for a period of time, but over time these prices will be highly predictable. It's quite easy. These are well-established markets though, You have to think in for well-established products in well-established markets, prices are highly predictable. For new things like Bitcoin or new things, I don't know, some sort of new company and the stock of value of their new stock price of their new company, those things are going to be highly speculative and have massive swings. They, like I say here, 99% of things that have well-established supply and demand characteristics can be highly predicted very accurately into the future. You must have asymmetric knowledge of something else. So yeah, if you're talking about these marginal items like Bitcoin, you have to have some sort of asymmetric knowledge, and that's why we own Bitcoin, because we have asymmetric knowledge of stock to flow, of economics, of monetary properties, and Bitcoin itself, the technologies involved with Bitcoin, all of this stuff. That's why we own Bitcoin, because we have asymmetric knowledge on this. But 99% of other things, you don't have asymmetric knowledge because they're very well established supply and demand characteristics. You can't have asymmetric knowledge. Like, remember that one movie, was it Trading Places? Was that it? Where about the oranges and the orange futures, and they had some agricultural report that they got pre-market, insider trading, and were able to trade on this information that they had. Well, they had asymmetric knowledge of something. That's the only way to make money. Because he asked, why are we not billionaires if it's highly predictable? Well, because everybody generally shares the same ability to predict 99% of things. It's just in those other places where there's asymmetric knowledge where the profits are to be made. So anyway, that is my little take on that. Let's get into some other things here. Let's talk about PCE, and I will go to Joe Consorti because he was talking about this. Here we go. Bring this up. U.S. inflation and wages cool. The Fed favored metrics have both eased in recent months. So this is the PCE. So it's, most of you know what PCE is, but it's a different kind of price index. Like you have the consumer price index, the CPI. Well, the PCE is based off of personal consumption expenditures. So slightly different. And this is the one that the Fed really likes They particularly like core PCE, but this is PCE, and you can see it is coming down month over month. It was at 0.2%, and year over year, it came in at 3%. Pretty big. He says core PCE fell down to 4.1%. So all of these quote unquote inflation measures are diving. They're absolutely diving. This is the employment cost index down below here, and you can see that there is a downtrend. It looked like in March there was a little blip upward, but this quarter now continues to decline. The lowest since, let's see, the lowest since what would this be? Q2 of 2021. So the lowest in 2 years is the employment cost index. So wages are cooling. US quote unquote inflation or price indices are cooling. Of course, price indices are not inflation or deflation. I just saw a tweet today about someone's talking about what is it called? Superconductor? No. I can't remember what the term is. Is it superconductor? Anyway, that new conductor thing, technology that came out, the room temperature and ambient pressure. I think it is superconductor. Anyway, they said, oh, this is going to make prices crash. And guess what that means? Deflation. And in the very next sentence, they said, but we need inflation in our economy. And there he was talking about supply of money going up, right? So the first thing where he talked about deflation, he's talking about price declines. And the second sentence, he's talking about supply increases. So it's just amazing how people can flip-flop between those two. You know, I didn't respond to that tweet, but I was thinking about that. And I was like, actually, price declines will most likely lead to inflation, like more money supply, because price declines, the consumers, it will be a stimulus to the consumers. And they'll go out and spend more money. Business will pick up. Banks will, loosen their lending standards because the economy is moving. Velocity is rising, right? There's more stuff going on. So banks are more willing to lend, which is money printing. So lower prices will ultimately lead to looser money and inflation. It's so counterintuitive when you're talking about credit-based money. It's super easy when you talk about commodity money. Of course, you have more dollars dollars per ounce or dollars per sat or however you want to peg your money. But if there's more dollars per sat, that's actual inflation. There's more money out there in the economy, but it doesn't cross over to credit-based money, only when there is a backing. So anyway, I could go on and on about that. What else do we have here that came up today? Oh, this was funny. I don't know. Let's see if I can share this. Go into here. Stop sharing. Can I share a window? Here we go. Let's pull this up. This is reported UFO sightings from 1906 to 2014. And this guy has been in front of Congress. I guess a few people maybe testifying in front of Congress talking about UFOs and their personal knowledge that there are UFOs and they saw the little gray men and all this stuff. Okay. But look at this reported UFO sightings. It's almost strictly a US phenomenon. And you could say it's almost strictly an English speaking phenomenon to see these UFO sightings. What does that tell you? It's a cultural thing. It's complete garbage. Somebody else, I think it was Wall Street Silver on Twitter, he had something about, oh, this guy's actually testifying that there's aliens on the earth and nobody seems to care. And I responded, well, yeah, it's all hearsay. It's all the same crazy stories we've heard forever. We know that there's psyops where they want to just distract you with this. People don't believe it. Absolutely. Nobody believes this stuff. It's just a small niche minority of people that believe this. So anyway, that was that. Let me see. What else do we have here from the group? Oh, Jason Lowry has made an appearance. Let me share this. I thought this was interesting. Where is it? There we go. So Jason Lowry, author, talking about how Bitcoin mining is of geopolitical interest, and the U.S. should pursue Bitcoin mining and pursue Bitcoin because it is like a new frontier of soft war. And he kind of disappeared. About 2 months ago or so, and now he's back. He says, "For those asking what's been going on with me, I was ordered to take software down and asked to stop talking about the subject publicly. Doesn't appear on MIT's website either." So he is in the Space Force. He does live here in Florida, I believe, down there, Cape Canaveral area. And I believe this. Some people were, I saw some people not believing this, that it was actually the soft reception to his ideas that made him completely pivot. But I don't think so. I think it was quite popular. And then he just fell off the face of the earth. And I can totally see the military ordering him to stop making public appearances, stop talking about this publicly, 100%. And guys, I was in the military for 10 years. I believe this, that they would do something like this. So anyway, he says, "Can't talk details, but things are good and I'm working hard behind the scenes. Appreciate the kind words." All right. So that was that. Is there any other topics from this? Oh, the BOJ. Let me just talk about this a little bit. I'll go back to my website so you guys can be looking at that while I'm talking about this. And so the BOJ, they've had done yield curve control, and the range for their yield curve control was plus or minus 0.5%. Well, now they've come out and their new range is plus or minus 1%, but they added some flexibility, quote unquote flexibility. So they're not going to just let, the pressure on the yields push them to 1% in the next few days. The flexibility is they're going to control the rate at which they move. So they won't just intervene at 1%. They'll intervene all along the way, however they see fit. And somebody that I read this morning was calling this yield curve control. So they're controlling how the yield curve is going to move. But my position for a long time here has been that yield curve control is not possible because central banks are not in charge of the market. And by Japan being forced to continually change and update their yield curve control policy and window to give in to the market, that's what they've done. They've never moved a way that would force the market to become tighter. You know what I'm saying? Like they didn't initiate yield curve control when the yield was outside of that window. They only initiated yield curve control when the yield was inside of that window. We don't know if they can force the yield into the window and keep it there. All we know is they can't seem to keep it within the window once it tries to break out. So I don't really believe in yield curve control. I think there is psychological influence here. There is some mechanical influence because they are actually going out there and buying. I think it's like, I don't know, is it 75% of the JGBs out there, the Japanese government bonds that they buy? It's just at such a scale, I would assume that would have some influence. But many studies have been done by central banks on QE, asset swaps like this. That's what they're using to do yield curve control. And they said up to 10% of GDP, which for the US would be what, like $2 trillion or $2.5 trillion, that would only move the yield 50 basis points or something like that. So it's not a significant tool, even with ungodly amounts of QE. 20 a month or 20 billion a month is not going to be able to control yields. That is just a bunch of psychological hogwash. So I don't believe in this yield curve control. It's the market is in control of these guys, and the reaction, their continued giving in to the market over and over and over, shows that that's the case. So anyway, that was the news out of the Bank of Japan. Let me check if there's any comments, guys. For Telegram, I said you could put it into this one, Spagball. Okay, Lubka's view seems kind of extreme. Yeah, it is. Would price be a conglomerate of subjective values then, or an expression of an average value? It's a market clearing price. Price is a market clearing price. Like a producer, they say they produce 1,000 widgets and they set the price at $1 and they can't quite sell out. So then they lower their price a little bit to 90 cents and they sell out of their inventory. So price that's paid is a market clearing price. Where subjective value comes into it is that, yes, people will, it's a measure of, demand. Okay, subjective value only has to do with the demand side, not the supply side. I mean, if that same producer would have made 10,000 widgets, he would have had to continually lower his price, maybe down to 10 cents per widget. And then that would be the market clearing price. Okay. So subjective value would only be part of the discussion on the demand side, not on the supply side. And prices are demand, supply, and demand. So that's what I can sum it up in this quick little podcast. But anyway, thanks for the comment over there. Let me check and see if there's any comments through this other streaming platforms. And I don't think there are. I hope my streaming software is working to bring in those comments. But anyway, all right, guys, that's going to do it for today. Thank you so much for hanging out on this Friday. Hope you have a great weekend. Sending out, best wishes for health and happiness out there to the people, the longtime listeners, as well as new listeners. Don't forget to like, subscribe, share this content out there, and I will see you guys on the next one. Peace.